Welcome. When you hear Warren Buffett and buy and hold, what comes to mind? For most, it's simply patience, buying a good company and waiting. But what if I told you that this is a dangerously incomplete understanding? Today, we're going to uncover the most potent yet subtle component of Buffett's genius, a concept called time-compounded optionality. It's the hidden engine that drives truly generational wealth, and it will change how you view investing forever. So what is time-compounded optionality? It's a paradigm shift. True buy and hold isn't a passive act of waiting. It's the strategic accumulation of options. Buffett's genius is in identifying and cultivating a portfolio of businesses that inherently generate more strategic possibilities the longer they are held. Think about possibilities like acquisitions, entering new markets, or breakthrough product innovations. These are options the market often fails to perceive or properly value in the short term. Traditional analysis overlooks this accretion of possibilities. This overlooked optionality is the true engine that compounds wealth far beyond simple earnings growth, and it's time we learned to see it. To unlock this hidden alpha, we need to move beyond conventional models. We need a new framework. Let me introduce the optionality multiplier matrix. This is a proprietary method for assessing companies not just on their current fundamentals, but on their capacity to generate and capitalize on future, unforeseen opportunities. The matrix uses three primary dimensions. First, the Adaptive Innovation Score, or AIS, which measures a company's agility to pivot and reinvent itself. This gets a 40% weighting. Second, Market Expansion Latitude, or ML, which quantifies a business's potential to scale into new markets or industries. This has a 35% weighting. And finally, Capital Allocation Dexterity, or CAD, which evaluates management's track record of deploying capital intelligently to create future options. This gets the final 25%. Companies scoring high across these dimensions are option-generating machines. Let's look at some real-world examples. Take Coca-Cola. The simple view is its predictable cash flow. The optionality view reveals how it leveraged its unparalleled distribution network, a high MEL score, and its marketing prowess, a high CAD score, to acquire and scale brands like Minute Maid and Dasani. Each acquisition was an option being exercised. Now consider See's Candies. It seems mundane, but its optionality was in the immense, predictable cash flow it provided Berkshire. This gave Buffett the capital, a perfect example of CAD, to fund the purchase of other option-rich businesses. But this can also go wrong. Look at General Electric historically. While it had high innovation and market potential, its capital allocation became catastrophically poor, creating negative optionality that restricted its future and ultimately destroyed shareholder value. This shows how critical all three dimensions are. Now, how do you implement this? It starts with reevaluating your current holdings. Ask yourself, are you holding linear growth companies, or are you holding option-generating machines? Use the AIS, MEL, and CAD framework as your guide. Be ruthless in cutting companies that are just static cash generators with no clear path to creating future options. Next, when screening for new investments, look for companies with high cash conversion, strong balance sheets, and management with a proven history of intelligent capital allocation. This strategy demands true long-term vision. You must think in decades, not quarters. Finally, embrace what I call patient aggression. The hold part is patience, but the buy part should be aggressive when a high optionality business faces short-term headwinds, allowing you to acquire its future potential at a discount. Let's bring it all together. By adopting the optionality multiplier matrix, you make a fundamental shift in your investment philosophy. You transition from merely owning businesses to owning the potential future states of those businesses. This is where truly generational wealth is created. It is found in the possibilities that are unseen by those who only look at today's numbers and last quarter's earnings report. Don't just buy and hold. Identify, buy, and hold option-generating machines. Own the future.